What's up guys, it's Michael here. In this video, we're going to talk about why is it so beneficial to become a business owner and what type of write-offs they can take. So a lot of people say the rich get richer and the poor gets poorer. And the reason why is simple as taxes. So becoming a business owner gets way more benefits than becoming an employee. Here, I'm going to recite this article that's written by the United States and by the IRS. So as you see in previous videos like Graham Steffens, he mentioned there's a section article 179 showing off what type of write-offs. And also there's another section article 162 that gives another section of write-offs for specific purposes as business owners. So the reason why it's so complicated is because the politicians make it complicated, because they make the tax code itself extremely complicated. But before this video begins, just a disclaimer, I'm not your financial advisor and this video is for entertainment purposes only. Too bad I have to say that. So let me break it down. I gotta read it down because this is ridiculously long. Section 162, in general, there shall be allowed as a deduction all the ordinary and necessary expenses paid or incurring during the taxable year in carrying on any trade or business, including 1. A reasonable allowance for salaries or other compensation for personal services actually rendered. That's a pretty gray area right there already. 2. Traveling expenses, bracketed, including amounts expended for meals and lodging other than the amounts which are lavish or extravagant under the circumstances while away from home in pursuit of a trade and business. And number 3. Rentals or other payments required to be made as a condition to the continued use or possession for purposes the trade or business of property to which the taxpayer has not taken or is not taking title or in which has no equity. So meaning is, within these three, it's really long, but put it this way, it's a lot of gray areas, meaning there's so many loopholes right there that's basically set and generated for as business owners to take. So basically, these can be bent to the point that you can write off nearly almost everything as a business owner. It's insane. So imagine, you're an employee. You do not get like nearly as much as benefits as an employer. But as an employer, you have the opportunity to write off everything, meaning pretty much close to tax-free. It's hard to express how many things you can write off because it's so broad to the point, even in this video, the 15 I mentioned, there's still more that can be added onto it. Virtually being tax-free, you can basically own anything while paying for it for taxes and make back all that money is because that's how the system works. If you want to change the system, then you have to play with the system. You know, you either play the game or you don't, as simple as that. So we're gonna break down the 15 tax deductible options you can take. And for this video, I am not your tax advisor. This is for educational purposes only. So let's begin. So the first one is self-employment tax. As you say, if you're a business owner, you have self-employment tax, and it's been broken down to, multiple brackets. Either you're married, single, widowed, divorced, etc., right? So the self-employment tax, meaning you have to pay a 15.3% tax. And the reason why is simple as that, Social Security. Social Security system is a flawed system itself, and you gotta pay tax versus to keep it running. Okay, great, happy. So in total, 15.3%, and you had to pay 12.4% into Social Security. How about the 2.9%? That is basically for Medicare, Medi-Cal. And if you make over a certain threshold, it's another 0.9% added on top. Meaning you can write all that off. 15.3%, you can write it off. Next, number 2. So if you own a business, you're gonna have an office. And some people like to make their offices at home. So it's considered a home office. Home office, you can do things like itemized deductions, meaning anything you buy in there or it's used for your personal space. So if you use, I believe around 15%. So you use 15% of your property in your own home as your office, you can write it off. Itemized deductions. Basically, it's so broad. You have to prove it in the first place, which is, it's not that difficult. For example, pen and pencil, write it off. You can say, oh, I use that for a business. This video you're watching on the camera, A7S III, about $6,000, write that off, no tax. Great. Tripod, write that off, no tax. Table, write that off, no tax. Using a computer to edit the videos, that's considered part of the business. Write it off, no tax. refrigerator, etc. The list keeps going on. That's how insane it is. That's how much things you can write off. So the problem is, if everyone knew about these type of stuff, then the government make no money because everyone will be writing off their taxes. That's why this is not taught in school. Simple as that. Number 3 is internet and phone bills. Another version of it. If you can watch this video, you need to use the internet. If you have a phone, you got to make calls to other places and meet with other customers and networking. There you go. You can write that off. So you have a phone bill, it's like $70 to $200 a month, depending on what plan you pay. I mean, what a ripoff, but hey, you can write that off too. No money paid. Phone, you own like whatever, iPhone, Android, you can Samsung, LG, whatever. It's $1,000 for the phone. Write that off. No tax. There you go. It's that insane. And the list keeps going. That's how broad it is. So the three things I mentioned earlier in the beginning of the video, it's super broad. It can be bent in so many ways. And this is only the beginning of it. And going down the list, number 4, health insurance premiums. So if you own a business, if you hire an employee or, you work by yourself, you have to get insurance. For this example, health insurance. So if you get sick, you have insurance to pay for it. So if you're a business owner and you get health insurance for yourself, you can write that off too. Guess what? Paying tax for insurance? Guess not. Number 5, meals. Yes, meals. Think about it. Especially in United States, and especially where I'm living, California. We have one of the highest sales tax rates. We have one of the highest tax brackets of income tax. So what happens, you can write off taxes you pay for a meal, sales tax. So I believe it's like 8, or it's 8.5 or 9.5. Don't quote me on that. But like imagine, you pay for sales tax, right? You can write that off. There's money coming back in again. Guess what? Meals, breakfast, lunch, and dinner. Maybe just lunch and dinner. Those two. Write that off. Guess what? Money coming back in, so you can be eating meals without paying for taxes. What do you know? Pretty crazy, huh? And the list keeps going on. Number 6 is traveling. Here's another super broad one. For example, this can be spun off in so many ways. It's pretty insane. Say you have a business. You had to go in Europe, who knows, China, Japan, whatever it is, Canada, whatever, right? You can go there technically as a business trip or maybe to another state. Consider as a business trip, and you can consider over there, it's like, hey, I'm doing there to go work. But at the same time, you can go there to have fun and travel with your family. If you do those two both in one, and if you can prove it, you can write that all off. Meaning all those money you spent, you do not have to pay taxes for it. Yes, even including flying, food, expenses, staying in a hotel, motel, whatever. Anything in there you pay for can be written off, tax-free. Congrats, what you know. Going down the list, of course, everyone should know this one at least. There's a lot of YouTubers making this one. Number 7, traveling, meaning vehicle use. So specifically, if you own a car, if you register under your business, all the miles you spent and the depreciation. So they think that a car, when you own it, it will depreciate. There's only really few exceptions like, the Lexus LFA, other supercars that are limited quality. Instead of depreciating, those go up. But in general, vehicles will depreciate. You can write that off, including gas and electricity use. So if you have an electrical car, you can write that off. So the money you have to spend for it, write that off. You have to pay for gas and you have to pay for tax, you can write that off, technically tax-free. What do you know? Vehicle use, including miles too. You can write all of that off. That's the benefit of becoming a business owner. Moving down the list, you have number 8. This one's pretty interesting. Interest. What do you mean by interest in number 8? Meaning loans. So if you take loans, for example, you need to start up a business, you need to pay off some type of debt, and you can prove it to the bank. And with your history and your credit scoring report that, I'm taking this loan to make my business grow, et cetera, to make more money off of it. If you can prove it to them, you can let them know it's like, hey, because when you take a loan, you have to pay back interest. Interest is how the bank makes money. But in theory, if you're a business owner and you're taking a loan as interest, you can write that off also. So taking a loan technically can be interest-free. Is you paying for taxes for it? Write it off. Simple as that. Number 9, publications and subscriptions. So a lot of people in these days and age, there's a lot of subscriptions and publication services. For example, program I'm editing this video in, Adobe Premiere Pro, Adobe products. That's a subscription service. I mean, yes, in a way you could use that type of program, use that. But instead of doing that, taking that, black hat method, you can just go to white hat method and just pay for the subscription and write it off. You can say, hey, If this is used for my business, in theory, you are using it for business, but you can use it for other things too. For example, I mean, whoever pays for YouTube Premium, congrats, good job for you. You're helping out Google. Using YouTube Premium, that's another publication and a subscription service. You can write that off. The same goes for internet and phone bills. Basically, the list goes on. So subscription services, write that off. If as long as you can prove it used for business, you're golden. Number 10. Education. So what this one's pretty interesting too, because education for a business, a lot of people usually, maybe you acquire another skill and stuff and maybe improve on skill, sharpen the skill. But this one is extremely broad because you can say, hey, I'm going back to college to improve my skill for my business. And you know how I can go from there. It can go many different ways. So technically, you could go to school and say, use for my business, as long as you can prove it in a way. Most of the time, you obviously can, because there's no way, you're gonna hire someone to stalk you? Not gonna happen. Unless, make that much amount of money, then yeah, in California's case, they'll probably do it. But most of the time, they will not. So if you can prove it, you can basically go to school tax-free. Pretty awesome, right? What a great deal. I will totally take that too. Any skills you need? You go back for education, go for it. It can be written off. So moving down the list, number 11 is business insurance. This one is a plus and a minus because it depends on, what side of the spectrum you see. So business insurance is basic insurance just in case you get sued or something happens. Maybe, your company building burns down, something happens to cover your butt. So this is really broad in business insurance. So between the two spectrums, you have yes and no. So looking at the no side, because they think that most people, will not crash into this problem. But at the same time, most of the people do not actually use their insurance they have to pay for because, maybe their business is low risk compared to high risk. At the same time, if it's low risk, why do I keep paying a premium? A little back door that I've seen being used so many times, even it's not recommended, but in reality, it is legal. Build your own insurance company. Just for yourself only. It's cheaper. And technically, you're not supposed to do it because that's how they state it. But in reality, you can do it. So another part you can write off, business insurance. Moving down the list, obviously this one, number 12, rent. So if you are renting a building, which majority of businesses are, so for example, food shops, restaurants, if they don't own a building, they rent the place. Or like gyms. Usually if they don't own the whole entire building, they rent it. Write that off, tax-free. You can say this is a business expense. Boom, tax-free. So if you are, let's say, renting an apartment and you're using that for business use, technically, you can write that off. This one does not apply to everyone because, if you own a house and you're not renting the place or renting the house, you can't write that off. But if you are, you can write it off. But even you do, you're not renting a house, there's many other things you can write off. Simple, as mentioned earlier. So moving down the list, we're almost done. It keeps going, it's pretty crazy. Number 13, startup costs, meaning when you start up a business, you gotta pay a fee. So you got to register your business like an LLC, S Corp, Corp, C Corp, just like multiple corporations down in the video description. And you can look at my previous videos. I'll explain more in detail of that. So you look at that, you start up a business. When you start a business, you got to pay your fees. So in California, I believe the fee is like $800, $850 a year. It's really expensive compared to other states because, it's not really too friendly over here for businesses. That's why most of them are leaving, but you can write it off. So startup costs for a business, you need money to start a business. Simple economics 101. Money to start a business can be written off too. I mean, the list just keeps going because in business, that's the whole point, is use money to make money. If you have no money, earn some money, then use that money to make yourself more money. And the only way to do that is networking with other people and having people find you at the end. Moving down the list, number 14. This one's pretty interesting. A lot of people do not know that. And I say that majority of people who are doing this type of niche area do not know that. Sadly, because I talked to a lot of people, they said, you can actually write that off. So yes, you can. Number 14, advertisement. And advertisement is really broad. Like most advertisements can be proven to be written off. So for example, Facebook, Google, and what are online social media platforms? You generate an advertisement, make a video, or one day you're watching this video, an advertisement comes up, people can write that off. Anyone creating an ad, they can write it off. So you say pay like $50 for advertisement. You say, hey, I'm using this for my business. That whole entire $50, you can just write that off. You say, hey, I'm using this for my business, and this is a business expense. Boom. There you go. So $50 being written off for your taxes. That's how you can save a lot of money. At the same time, use it to generate more money. Moving down the list, the last one, number 15, retirement savings. And what is really interesting about it, because in retirement, if you think about it, if you're working by yourself and apparently you retire one day, or a lot of other companies see how they offer retirement. So they're like there's multiple types. There's like the IRA, there's like I believe if they offer a 401k, just take it because it's basically benefits and money. Because once you pass a certain threshold in your age, you can basically withdraw money from your 401k, even if it's a kind of a flawed system. But if you're a business owner, you can write it off. If you're paying money to like another salary or employee, or maybe your friends or family working for you, you give them a retirement plan, 401k, IRA, you can write that off. Meaning all that money you put into the retirement account instead of paying taxes for it, because if you don't spend that money, someone's gonna get it. And instead the people are gonna get is gonna be the government or whoever taxpayer it is. So instead of doing that, why not put that money into somewhere more useful? And for example, offering your employer a 401k plan, and you can write that off because it's considered as a business expense. These are the 15 most common practices used to be written off in section 162 in the tax bill and tax code or tax deductions. There's actually way more than this. The list continues going on. And as you can see, this is the why majority of people, whoever are wealthy, are usually business owners. The rich get richer because the list I just list down below, it's crazy. It's a massive amount. As I mentioned, you can literally write almost anything. As long as you can prove it, you can write almost anything tax-free. And the reason why people don't want you to know, especially schools and colleges, and then why they don't even make it mandatory to make everything else mandatory is because, if you start writing, as I just mentioned, you write all those things off, no one's gonna pay taxes. Like literally, as I mentioned, it's like what? Eating, sleeping, who knows? You can maybe write off for sleeping. Business, hey, I'm sleeping, I'm making money from that. Who knows? You can spin it out and say write it off for taxes. Even living expenses, mortgages, rent. Imagine if you write off all that tax-free, government's not gonna make any money. So that's the beauty of it. So basically, you guys should always hit the like button and a subscribe button. So when I explain more of these, I make more of these videos in the future, I can let you guys know what type of options you guys can take. As I mentioned earlier, this video is for educational purposes only. At the same time, it's to help you guys make better decisions for your financial future also. So whatever you guys do, if you want to become an employee or business owner, just understand the end that in America, there's a lot of loopholes. And even you can feel it's not fair, it's actually very fair. You just have to go find it. And the list I just mentioned, that's only section article 162. There's ones like 179 and the list goes on. So if you're a business owner and you want to play the financial game, this is just a small portion I just listed. How many things you can write off. And that's why you look at companies like Amazon, they're tax-free. Like I believe in 2018 is because they just basically use whatever the bill was. And everyone gets all, mad about it. It's like, hey, you didn't pay any taxes. Hey, the politicians wrote the tax bill. Why are you getting mad at them instead of Amazon? Use the rule to their advantage. That's how the aim is. Just like you smashing down a like button and subscribe button. And that's it for this video. I'll see you next time. Please subscribe and comment down below. So next time, if you write down your comments, I might actually make a video topic on it. I'll see you next time on my channel. Peace.